You've probably heard this before. You need a better strategy. You need the right indicator. You need a mentor who knows the secret. And maybe you've spent months, even years searching for that edge, buying courses, watching tutorials, backtesting systems until your eyes blur. But here's what nobody tells you. The strategy isn't the problem. You are. Let me prove it to you with a simple question. Adam Moradi made millions using nothing but trend lines, MACD, and divergences. Tools you can learn in a free YouTube tutorial. Tools you probably already know. He said it himself. People think there's a secret, something big to discover. No! The simpler you look at the chart, the simpler it becomes. So if the tools are simple, if the strategy is available to everyone, why do 99% of traders lose? Why do the same patterns make one person rich and bankrupt another? Because the strategy isn't the variable, the operator is. Consider this number. Daniel Holmes was recently moved to a Top Step Live account, something they only do for 98 out of 100,000 traders. That's 0.0. If knowledge were the answer, if finding the right system were the solution, those numbers would be dramatically higher. But they're not, because something else entirely separates the survivors from the statistics. Adam put it perfectly with an analogy that should haunt every trader who thinks tools are the answer. You're a surgeon, he said. You buy a blade. I buy the same blade. Can you perform brain surgery? Same tools, same strategy, completely different result. The scalpel doesn't make the surgeon. 10,000 hours of disciplined practice does. The indicator doesn't make the trader. Something far more difficult to acquire does. And then there's Takashi Kotegawa, a name that became legend in Japanese trading circles. He started with $15,000 in a small Tokyo apartment. No team, no Bloomberg terminal, no hedge fund resources. Just a simple desk, a few monitors, and a steady diet of instant noodles. Within a few years, that small account exploded into over $160 million. His edge wasn't technology. It wasn't a proprietary algorithm. It wasn't insider information. It was his nervous system, his ability to remain completely calm while everyone around him panicked, his capacity to sit for hours doing absolutely nothing while other traders frantically chased every movement. So if intelligence isn't the edge, if strategy isn't the secret, if technology isn't the answer, what is? The answer will make you uncomfortable because it means you can't buy it, you can't download it, you can't learn it in a weekend course. The answer is you, your emotions, your impulses, your relationship with fear and greed and the desperate need to be right. The market is designed to exploit these weaknesses, not your ignorance, your feelings, every flashing ticker, every green candle you missed, every red candle that keeps falling. These aren't random events. They're precision instruments designed to trigger your deepest psychological vulnerabilities. The market is a biological weapon targeting your emotions. And right now, you're losing that war. Not because you don't know enough, because you feel too much. Before we go further, let me give you the solution up front. What you're about to learn is called the 0-point protocol. It has 5 pillars. Observe your emotions before clicking. Simplify your strategy to the essential. Wait for setups to come to you instead of hunting them. Protect your capital like ammunition, and detach your identity from your outcomes. These 5 principles will thread through every story you're about to hear. Every lesson will connect back to them. Keep them in mind as we dive into the lives of 3 traders who discovered these truths the hard way. Let me tell you about the best 3 days of a man's life. Adam Moradi started as a simple construction worker in Turkey. He left Iran chasing a dream of teaching English, but the job fell through. They taught English in Turkish, and he didn't speak Turkish. No work permit, no insurance. Illegal labor was all he could find, and then his boss fired him. Just like that. Didn't even pay him what he was owed. Adam found himself alone in a foreign country with nothing. For 3 days, he slept in a park. And here's where the story takes a turn that will challenge everything you believe about success and failure. Those 3 days, Adam says, were the best days of my life because I was not afraid of anything. I didn't feel fear. I wasn't worried. Zero stress. I was at the end of the line. I had nothing left to lose. Think about that for a moment. Homeless, broke, sleeping on a bench in a Turkish park, and he describes it as freedom. Most traders never understand this fundamental truth. You're always afraid of losing something. That's the weight you carry into every trade. Losing the position, losing the money, losing your confidence, losing your sense of being a smart person who makes good decisions. The fear of loss doesn't make you careful. It makes you paralyzed. It makes you hold losing positions, hoping they'll recover. It makes you cut winners too early because you're terrified the profit will disappear. It makes you hesitate when you should act and act when you should wait. But Adam had hit 0. There was nothing left to protect. And in that protection vacuum, something remarkable happened. He describes it as a death. My original name in Iran is Kashayar, he explains, but since I got the Turkish passport, I changed my name to Adam. That first night in the park, I can tell you that Kashayar died. When I talk about him now, I feel like I'm talking about another person. I am not that anymore. Even his wife confirms it. This man completely transformed. While homeless, Adam started trading on his phone. He'd learned the basics from a mentor named Tina. Nothing fancy. Trend lines, divergences, simple price action. And now, with nothing left to lose, he traded differently than he ever had before. No fear, no hesitation, no emotional attachment to the outcome. He'd work at a restaurant during the day just to charge his phone and get some food. Then he'd trade. In those 3 days, he didn't make life-changing money. He made something more valuable. He discovered what it feels like to operate without the crushing weight of protecting something. The desperate trader bleeds. That's a truth the market teaches everyone eventually. If you need the money, you will lose it. If you're trading to save your relationship, to prove your doubters wrong, to escape a job you hate, that desperation leaks into every decision. The market can smell it, and it will take everything from you. But when you've already lost everything, when there's nothing left to protect, a strange clarity emerges. You stop trying to predict what the market will do. You start simply responding to what it's doing. You stop fighting. You start flowing. This is the paradox that most traders never grasp. The tighter you grip, the more you lose. The more you surrender, the more you gain. Not surrender to the market, surrender of your need to control it, surrender of your ego, surrender of your desperate attachment to being right. This is the fifth pillar of the 0-point protocol. Detachment. Adam found it at rock bottom. You don't have to lose everything to learn it, but you do have to understand that your attachment to outcomes is costing you more than any bad trade ever could. Adam found freedom by losing everything external, but there was still an enemy left, one that lived inside his own skull. You don't trade alone. Even when you're sitting by yourself in front of a screen at 3 in the morning, you're not alone. There are 3 invisible traders making decisions through your hands. They don't show up on your charts. They don't announce themselves. They hijack your mouse and click before you even know what happened. Their names are fear, greed, and FOMO. Let's examine each one carefully because until you can name them, you can't fight them. Fear is the paralysis agent. It's what kept traders frozen during the 2005 Tokyo Stock Exchange error. A mistaken trade order sent shockwaves through the system. Screens bled red. Panic flooded trading floors. Most traders couldn't move, couldn't think. But Kotegawa sat still, eyes fixed, heart calm, waiting, watching. And when the moment of clarity returned, when fear had exhausted itself in others, he struck. That single event reportedly earned him billions of yen. Fear makes you hold losing positions hoping they'll recover because selling would mean admitting you were wrong. Fear makes you cut winning positions too early because you're terrified the profit will evaporate. Greed is the shapeshifter. Adam felt it consuming him, but he learned to see it differently. Every time I was greedy, he explains, essentially, it wasn't me who was greedy. It was something inside me that I was watching. Greed doesn't announce itself. It disguises itself as competence, as conviction. It whispers, size up, you've earned this, you've done the analysis, go bigger, and then it destroys you. FOMO is the silent predator. Daniel Holmes, who consistently pulls 6-figure months trading gold, sees this pattern constantly in the traders he mentors. A lot of guys say, man, just take the trade, you're going to miss it. And he responds the same way every time. If I miss this trade, whoopee-doo! I care about the next 1,000 trades. That sentence should be tattooed on every trader's monitor. FOMO makes you care desperately about this trade, this moment, this opportunity that seems like it's slipping away. Professionals don't think like that. They care about the next 1,000 trades because they understand that one trade is statistically meaningless. Your edge expresses over hundreds of iterations. Here's the biological reality that nobody talks about. Your amygdala, the fear center of your brain, processes threats about 12 milliseconds before your rational cortex even registers what's happening. 12 milliseconds. That's faster than a blink. You're literally designed by evolution to panic first and think second. This made perfect sense when your ancestors were running from predators. It's catastrophic when you're trying to make rational decisions about position sizing. Trading success requires inverting 200,000 years of evolution. It requires you to notice that fear spike, that greed whisper, that FOMO scream, and not act on them, not suppress them, not pretend they don't exist, but observe them without obeying them. This is the first pillar of the 0-point protocol. Observe. Before every trade, pause. Name the emotion. Ask yourself whether you're trading from emotion or clarity. If emotion, close the platform. If clarity, proceed. The three traders in your head aren't going away. They're hardwired into your neurology. The question isn't whether you'll feel fear and greed and FOMO. You will. The question is whether you'll let them click the mouse for you or whether you'll learn to watch them, name them, and choose a different response. Now let me show you what happens when these three traders win. When they take complete control of a disciplined professional. Adam Moradi built his account over years of disciplined trading, and then came a night that erased everything. I was in my trading room, he recalls. Shiba. It pumped 500% in an instant. I lost $980,000 on Binance. And that was everything I had. When I say everything, I mean zero. Absolute zero. Stop and let that number sink in. $980,000 gone. Not in a year of bad trades, not in a month of poor decisions. In moments, everything he had built, his security, his identity as a successful trader, his proof that he had figured it out. The context matters. This was during a period when cryptocurrency markets were, as Adam describes it, very messy. Not like they are now, where movements are somewhat predictable. Back then, the market was wild. A 500% pump in an instant was possible, and Adam was on the wrong side of it. I remember it was 3 a.m, he continues. My wife was sleeping, but she saw me. She looked at my face. She said, "What happened?" I said, "I got liquidated." She asked, "How much?" I said, "All of it." And here's where the story reveals something crucial about what separates traders who survive from traders who quit forever. She said, "Okay, just go to sleep." Those 5 words. Okay, just go to sleep. In that moment, his wife didn't panic, didn't blame, didn't catastrophize. She absorbed the blow and gave him permission to stop, to rest, to face it tomorrow with a clearer mind. This is the most important part of being a trader, Adam emphasizes. You need someone as your supporter. His wife had been that supporter for 17 years of marriage, through 10 years of trading, the wins, the losses, the nothing left moments. She massaged me, he says, comforted me, talked to me, supported me. Most traders lose alone. They hide losses from partners, from friends, from family. They create a secret world of failure that compounds psychologically. When you can't tell anyone what happened, the shame doesn't have anywhere to go. It festers. It transforms into something darker. The isolation becomes its own form of destruction. But Adam had someone who could hold the truth with him, someone who didn't need him to be perfect, someone who could absorb the impact without breaking. And because of that, he didn't quit. He went back to the same simple approach, the same trend lines, the same divergences, nothing fancy, and the money returned, not because he found a better strategy, because his psychology was intact. His wife had preserved what no indicator could have saved. The rebuild after catastrophic loss isn't primarily technical, it's emotional. It's having someone who can tell you that the worst has happened and the world hasn't ended. It's having a foundation that exists outside of your profit and loss statement. If you don't have that foundation, build it now. Find the person you can tell the truth to about your trading, not a fellow trader who might judge or compete, someone who loves you independent of your account balance. The chart is not a reflection of price. It's a mirror of your internal psychology. Every trading mistake you make isn't random. It's a character flaw magnified and returned to you in the form of a loss. Takashi Kotegawa understood this at a level that bordered on spiritual. He didn't trade to make money. He traded to master his reactions. He viewed the market as a mirror. His journal wasn't filled with questions like, was I right about that setup? His central question was different. What did I feel before I clicked? That question changes everything. It shifts focus from the external, what the market did, to the internal, what you felt when you acted. And that shift is where transformation begins. Adam discovered the same truth through his own path. He calls it learning to observe the observer. I learned to observe myself from an outside view, he explains. When he felt greedy, it wasn't me who was greedy. It was something inside me that I was watching. I can see it from a third-person point of view. This isn't suppression. He's not pretending the greed doesn't exist. I'm not telling you that I removed my greed or solved it, he clarifies. I observe it. I feel greed, but I know that I'm greedy. I know. I observe. The difference between being consumed by an emotion and observing it is the difference between drowning and watching a wave from the shore. You can see its power. You can respect its danger, but it's not pulling you under. Trading is expensive therapy. This isn't a metaphor. It's literally true. The market will charge you tuition for every unexamined flaw in your character. If you're greedy in life, you'll over-leverage. If you're anxious, you'll cut winners early. If you need external validation, you'll revenge trade to prove you're not stupid. If you're impatient in relationships, you'll force entries. If you avoid conflict, you'll avoid setting stop losses. Every red candle is feedback about who you are. Neuroscience supports this approach. Simply labeling an emotion reduces amygdala activation. The act of saying to yourself, I am feeling fear right now, is fundamentally different than being consumed by fear. The label creates a tiny gap, a microsecond of distance between the feeling and the reaction, and in that gap, choice becomes possible. Mark Douglas wrote something that captures this perfectly. The market doesn't generate happy or painful information, it just generates information. The market isn't attacking you, it's not personal, it's simply reflecting back what you bring to it. Here's a simple exercise you can start today. Before every trade, pause for 5 seconds. Ask yourself, what am I feeling right now? Name it specifically. Fear of missing out, greed for bigger gains, frustration from the last loss, boredom looking for action, revenge seeking validation. Then ask the harder question. Am I trading from emotion or clarity? If emotion, close the platform. If clarity, proceed. This simple circuit repeated consistently will save you more money than any indicator ever created. Once you see the mirror clearly, you can start examining what it reveals. And what it reveals for most traders is an addiction they don't even know they have. You aren't trading, you're feeding an addiction. This sounds harsh, it's meant to. Because until you recognize the pattern, you can't break it. The uncertainty of the market creates what psychologists call a variable reward schedule. It's the same mechanism that makes slot machines so devastatingly effective. The interesting part is that almost winning releases more dopamine than actually winning. The near miss, the trade that almost worked, the setup that was so close, these create more neurological craving than clear victories. The market's unpredictability isn't a bug, it's a feature designed to keep you clicking, to keep you engaged, to keep you coming back for one more trade, one more setup, one more chance to feel that rush. Daniel Holmes sees this constantly in struggling traders. What do you think a beginner trader starts to feel after sitting there for 3 hours, he asks. Man, I've been sitting here for 3 hours. I deserve a trade. Let me take this setup. That word, deserve, it's the addiction talking. The market doesn't care what you deserve. It doesn't care how long you've waited. It doesn't owe you an opportunity because you showed up. But the addicted brain doesn't process reality. It processes craving. The antidote looks like madness to the amateur. Kotegawa sometimes sat for hours doing absolutely nothing, just watching, not analyzing, not planning, watching, waiting. His edge wasn't in predicting what would happen. It was in observing without the compulsion to act. Hours of nothing, then one trade, millions made. The nothing was the edge. You're not showing up to the screen to trade, Daniel explains. You're showing up to see if the setup comes to you. When you show up with the intent to trade, that's when you start to force things. Read that again. You're not showing up to trade. You're showing up to see if you should trade. The distinction seems subtle. It's enormous. Here's a test that will reveal the truth about your relationship with trading. Can you sit for 3 hours, see 5 potential opportunities, take 0 trades and feel fine about it? Can you watch a big move happen without you and feel nothing but mild interest? Can you close your platform without having clicked buy or sell a single time? If the answer is no, if that scenario creates anxiety or frustration or a nagging sense that you're missing out, then you're not trading. You're using. The market has become your slot machine. This is the third pillar of the 0-point protocol. Wait. The profitable trader is the one who can be bored. Boredom is a filter. It filters out the amateurs who need the dopamine hit. Every session you can end without forcing a trade. You're building the psychological muscle that separates survivors from statistics. Fear of missing out is the market's way of taxing the impatient. It forces you to buy the top because you crave inclusion in the move. Every green candle you chase is a payment to someone who was there first. You know the feeling. A big green candle appears on your screen. The price is running. Other people are making money right now. You can feel it physically. A tightness in your chest, an urgency that borders on panic. You need to be on this move. You need to participate. Missing it would be unbearable. That pain isn't random. It's neurological. Social exclusion and financial exclusion activate the same brain regions. When you see others winning and you're not part of it, your brain processes it as a threat, as rejection, as being left behind by the tribe. Your ancestors survived by staying with the group. When the group moves, you feel the primal urge to follow. Daniel Holmes gets asked constantly about managing this feeling. His response is always the same. If I miss this trade, whoopee-doo. I care about the next 1,000 trades because I know over 1,000 trades, this comes back more than it continues up. One trade is statistically meaningless. This is the hardest truth for emotional traders to accept. You're not playing a single hand, you're playing a lifetime of hands. Getting emotional about any individual setup is like a casino owner losing sleep because a tourist hit blackjack once. The math is on your side if you play enough hands correctly, but only if you don't bankrupt yourself chasing individual outcomes. Adam noticed this pattern in Iranian culture, and it applies directly to markets. Trends are taken seriously by people. The herd mentality. By the time something is trending, by the time it's obvious, by the time everyone's talking about it, the money has been made. You're not early. You're exit liquidity. You're the person the smart money is selling to. Daniel has a simple rule that eliminates FOMO-driven trades. If the setup isn't there within my time frame, I don't invent one. There is no, I deserve a trade because I've been patient. The market owes you nothing. Your waiting earns you nothing except the opportunity to wait longer. The solution isn't to feel FOMO less. You're human. You'll feel it. The solution is to recognize it instantly, name it immediately, and refuse to let it click the mouse for you. That's not suppression. That's awareness creating choice. And when FOMO does lead to a loss, when you do buy the top and watch it crash, when you do chase the move and get burned, that's when the most dangerous demon emerges. Revenge trading is your ego's last stand. It's the attempt to force the market to respect you, to prove that you're not stupid, to get back what's yours, and it is the fastest path to zero. Adam's $980,000 loss wasn't just bad luck. During that period, he reflects, crypto was very messy. It wasn't like right now. He refused to accept that the environment had shifted. His thesis made sense based on how the market had behaved. But the market changed. And he didn't change with it. He fought instead of flowing. And the market doesn't lose fights. Here's what happens biologically when you take a significant loss. Blood leaves your prefrontal cortex. That's the part of your brain responsible for rational decision-making, impulse control, and long-term thinking. The blood floods instead to your amygdala. That's the fight-or-flight center. You literally become stupider. This isn't a metaphor. Cognitive testing shows that decision-making capacity drops by 30 to 50% under emotional arousal. After a bad loss, you are measurably less capable of making good decisions, but you don't feel less capable. You feel certain. You feel like you know exactly what you need to do. That certainty is the most dangerous illusion in trading. There's a crucial distinction that professionals understand and amateurs don't. The difference between a loss and being wrong. A loss is a business expense. It's the cost of playing the game. It has no moral dimension. It says nothing about your intelligence or worth as a person. Being wrong, however, is an ego hit. It's a challenge to your identity as someone who makes good decisions. When you revenge trade, you're not trying to make money. You're trying to erase the feeling of being wrong. You're trying to prove something to the market, to yourself, to the imaginary audience you feel is watching and judging. This never works because you're not operating rationally. You're operating from a wounded ego, and wounded egos make terrible trading decisions. Think about the rattlesnake bite. If you get bit and try to chase the snake, the poison circulates faster. Your movement spreads the venom through your system. The only survival move is to stop moving. But everything in you screams to chase, to fight, to get revenge. The solution is mechanical. Daniel Holmes removes the decision from his compromised brain entirely. 2 L's and done. If the first 2 trades I take for the day are 2 losses, I'm done. Not I'll be careful now. Not let me see how I feel. Done. Walk away. Come back tomorrow. This is the 4th pillar of the 0-point protocol. Protect. After 2 losses, you are neurologically compromised. You cannot trust your own decision-making. The best trade you can make is no trade at all. Now you know the psychological battlefield. Let me show you the simple weapons that actually win. Complex strategies are for people who want to sound smart. Simple strategies are for people who want to get rich. Adam's entire trading arsenal would fit on an index card. I learned trend lines, MACD, divergences, that's it, and nothing more. He made millions with tools you can learn in an afternoon. Tools that are freely available everywhere. Tools that have been around for decades. Daniel Holmes, who pulls over $100,000 a month consistently, describes his approach the same way. The entirety of the strategy is based around support and resistance. I just say key areas where the market's respecting, wait for breakout, wait for retest, enter on confirmation. That's it. That's the system that generated those numbers. Kotegawa didn't use algorithms, didn't have teams of analysts, didn't build complex models. He read emotion frozen in candlesticks. His edge wasn't in predicting. It was in observing what was already obvious to anyone calm enough to see it. Adam's surgeon analogy deserves repetition. You're a surgeon. You buy a blade. I buy the same blade. Can you perform brain surgery? The tools are identical. The outcomes are opposite. What's the variable? 10,000 hours of disciplined practice with that blade, understanding how tissue behaves, developing the steadiness of hand, building the judgment to know when to cut and when to wait. No one asks a surgeon what brand of scalpel they prefer, because everyone understands that the tool is almost irrelevant compared to the skill of the operator. But in trading, everyone obsesses over tools. What indicator do you use? What time frame? What software? As if the answer would suddenly make them profitable. It won't. Because complexity serves a hidden function. It provides camouflage. When your strategy is complex, when you're juggling 8 indicators and 3 time frames and pattern recognition algorithms, you can't identify what's actually causing your wins and losses. The complexity obscures accountability. You can always blame a different element of the system. Simplicity creates brutal accountability. When your entire strategy is wait for support or resistance, wait for the break, wait for the retest, enter on confirmation, there's nowhere to hide. Either you followed the rules or you didn't. Either the setup was there or it wasn't. Either you were patient or you weren't. That accountability is uncomfortable, which is exactly why it works. Discomfort is data. This is the second pillar of the 0-point protocol. Simplify. You don't need to master some complex system. You need to master a simple approach so completely that you can execute it without emotional interference. 90% of trading is waiting. Most traders can't accept this. They feel productive when they're clicking, when they're in a position, when something is happening. But the professionals live in the spaces between action. They spend most of their time watching and waiting for conditions that rarely appear. Daniel Holmes describes his typical session. I give myself a 1.5 to 3 hour window. I mark my levels. I wait for price to get to one of those levels. If I don't see that within that time frame, no trade. That's it. Hours of watching, marking, waiting. And often nothing happens that meets his criteria, so he walks away. 0 trades. To the amateur, this looks like failure. 3 hours and nothing to show for it? What a waste. But the professional understands that the nothing is the filter. The nothing is what separates him from the 99% who forced to trade during those same 3 hours and lost money. Kotegawa took this to an extreme during the 2005 Tokyo Stock Exchange incident. While panic flooded the market, while other traders either froze or made desperate decisions, he sat still, eyes fixed, heart calm, not acting, watching, waiting for the chaos to exhaust itself. And when clarity returned, when fear had spent itself, he moved decisively. That patience, that willingness to be still while everyone else was frantic, earned him billions of yen in a single opportunity. Jesse Livermore, one of history's greatest traders, said it plainly. It was never my thinking that made me money. It was always my sitting. Got that? My sitting tight. That quote should hang above every trading desk. The money isn't in the action. It's in the restraint. Think about snipers versus machine gunners. The machine gunner sprays bullets hoping something hits. The sniper waits hours for a single shot. 1 bullet, 1 kill. Which one would you rather be in the market? Kotegawa had a rule that was absolute. If I feel emotional, I stop. Not. I try to manage the emotion and trade anyway. Stop. Full cessation. Come back when clarity returns. That's not weakness. That's the highest form of trading discipline. You've waited. The setup appears. Now comes the moment of truth. Execution requires rigid rules to bypass emotional hesitation. You don't guess. You wait for the close. The candle must prove itself before you act. Daniel explains the trap that catches amateurs constantly. How many times have you seen a candle above a respected level with about a minute on the clock, and then it drops back in at the last minute and closes in the range? You were so sure. The breakout was happening, and then it wasn't. If you'd entered on the impulse, you'd be stopped out. If you'd waited for closure, you'd have been spared. Impulse entries are gambling. Closure entries are confirmation. The 15-minute time frame is the lowest Daniel will go. If I go to the 5-minute, he explains, price is very disrespectful to levels. If I go to the 1 minute, it almost means nothing. The lower the time frame, the more noise drowns out signal. A 5-minute candle breaking a level could be nothing but temporary volatility. A 15-minute close above that same level means buyers have held price there through multiple waves of selling pressure. But even the close isn't the entry. The next step is where most traders get destroyed. After a breakout close, Daniel waits for something specific. I'm looking for it to push back down into the range. Most traders who bought the breakout are getting stopped out at this point. Most traders watching are assuming the breakout failed, but the professional is waiting. This shows me that sellers tried to push the market back into the range, but buyers said, no, bro, we're not having any of that, and pushed it back up. That rejection, that failed attempt to invalidate the breakout, that's the confirmation. The breakout isn't the entry. The successful retest is. Daniel also reads individual candles like a poker player reads tells. A strong body with balanced wicks on each end means buyers or sellers are clearly in control. A candle with almost no wick shows strong movement but untested. A long wick rejection shows a clear battle where one side won decisively, and the doji, a small body with long wicks on both sides, shows tug of war. No one in control. Most beginners trade dojis. They see them as setups. Professionals see them as warning signs. No one's in control here means I don't know what happens next. And that means don't trade. Every candle is trying to tell you something. Learn to hear it. When you have these rules, rigid and specific, you remove the biggest enemy of execution, yourself. The rules click the mouse for you. Your emotions watch from the sidelines. You are not a profit generator. You are a risk manager. Survival is the only metric that counts in the early years of trading, and the math is merciless. A 50% loss requires a 100% gain just to recover. A 70% loss requires a 233% gain. Let that sink in. If you lose 70% of your account, you need to more than triple what remains just to get back to where you started. These numbers are not abstract. They represent the brutal mathematics of ruin. Kotegawa understood this intuitively. He would deliberately size down when he felt uncertain, not when the setup was uncertain, when he felt uncertain. If his emotional state was off, if something didn't feel right in his nervous system, he reduced risk. He would even close a profitable position early if his emotions started to take over, because he knew that protecting his capital was more important than maximizing any single trade. Daniel has a mechanical approach to risk. My stop loss goes underneath the current candle wick, because if price breaks the low of its own wick, I'm just wrong. It already did that. Why is it coming back there? The stop isn't arbitrary, it's logical. It marks the point where the thesis is invalidated. If price goes there, you were wrong about this trade. Accept it. Move on. But the real sophistication comes in how Daniel manages winners. I don't cut my whole position at the take profit, he explains. I cut 80% of the position at a 1-to-1 risk reward. Then I move my stop loss to my entry point. Now I'm in a break-even trade. I've secured 80%. Even if price comes back down, I'm safe. That phrase should become part of your trading vocabulary. I'm safe. Not I'm maximizing. Not I'm getting everything I can. Safe. Protected. Still in the game for tomorrow. Bruce Kovner, one of the greatest traders in history, said something that should terrify every beginner. The worst thing that can happen to a new trader is to make money on their first trade. It creates false confidence. They size up. They abandon the rules that seemed unnecessary during the win, and the market takes it all back. Your account is your ammunition. Every dollar you protect today is a dollar that can compound tomorrow. Every dollar you lose to poor risk management is gone forever. Sizing big feels exciting. Sizing conservatively feels boring, and boring is the entire game. What happens when the math goes against you despite perfect execution? You followed the rules, you waited for the setup, you managed risk appropriately, and you still lost, then lost again. You need a mechanical shutdown. Daniel's rule is absolute. If the first 2 trades I take for the day are 2 losses, I'm done. Not 3, not let me see how I feel. Done. Walk away, come back tomorrow. This seems extreme to traders who haven't experienced the spiral, but Daniel has watched it happen countless times. You don't think straight after 2 L's. You don't. That's not an opinion. It's neuroscience. After consecutive losses, your brain chemistry changes. Cortisol floods your system. Your prefrontal cortex goes partially offline. You're operating with diminished cognitive capacity while feeling more certain than ever. Dangerous part is you don't feel impaired. You feel clear. You feel like you know exactly what you need to do. That false clarity is the most expensive illusion in trading. Daniel also limits his exposure by time. He trades 1.5 to 3 hours maximum per session. Be careful, he warns. If you're going to trade London but then also trade New York, you take an L in London, most guys come into New York with a vengeance. Bad way to go. The solution is mechanical because it has to be. In the moment of tilt, you cannot trust your judgment about whether you're tilted. That's the whole point of tilt. It distorts self-assessment. So you need a rule that doesn't require self-assessment. 2 losses means stop. No evaluation needed. No decision to make. Just walk away. Walking away is a trade. When you close your platform after 2 losses, you haven't stopped trading. You've made the most profitable trade available to you. You've traded potential loss for peace of mind. You've traded revenge for longevity. The 1,000-trade perspective helps here. 1 day doesn't matter. 1 week doesn't matter. Your edge expresses over hundreds of iterations. Blowing up today means you don't get to play tomorrow. The ultimate trader is invisible. No ego, no fame, no flash. Success in trading isn't celebrated, it's protected. The moment you start needing validation, you lose the edge you built. Takashi Kotegawa turned $15,000 into $160 million. And he still ate instant noodles, still lived in a small apartment, still traded on the same desk. When he could afford anything in the world, he chose simplicity. Because he understood that comfort is the enemy of growth. The moment you get comfortable, you stop being sharp. Adam anchors his identity fiercely. I never said I'm a YouTuber. I never said I'm a real estate advisor. I always tell people and myself, I am a trader. The identity is internal, not external. It doesn't require validation from followers or fancy possessions. It exists independent of what anyone else thinks. But Adam also channeled his ego into something constructive. After his boss fired him and he became homeless, after he rebuilt his trading account, he did something fascinating. He built an apartment building, and he hired his former boss to do the construction work. I sat there watching him build it, Adam recalls. He told others, you see this guy? He used to be my worker. Now he's my boss. That was the best revenge I've ever had in my life. But here's the crucial detail. Adam didn't sell that building, didn't rent it. Put it in his will that it should never be sold. It exists as a symbol, a monument to his transformation. The ego satisfaction is real, but it's contained. It's channeled into something that doesn't affect his trading. Kotegawa embodied this principle even more extremely. He didn't celebrate wins. He didn't mourn mistakes. He just analyzed them. Every day began at zero. Every trade proved nothing about the next. The scoreboard reset constantly in his mind. That's the ghost in the machine. The trader who moves through markets without leaving an emotional trace. Who extracts capital without needing recognition. Who wins without requiring applause. The Lambo dream the trading influencers sell is actually a trap. It ties your success to external validation, to possessions that require display, to an identity that depends on other people's perception. The monk reality is different, quiet, invisible, free, not free from the system, free within it. Adam has a surprisingly philosophical take on this. Being rich, he points out, means you're part of the matrix. You have lots of money. Money is something they created. You're a big shareholder. There is no escape from the system. The wealthy person just has different constraints than the poor person, different problems, different concerns, still constrained. The freedom isn't in escaping, it's in having options within the system, the ability to choose your constraints, to select which problems you want to have. Everything you've learned leads to one state of being, one way of existing in the markets that makes you nearly untouchable, 0 point. It's the state where you observe without feeling, wait without suffering, execute without ego. It's not a destination you reach once, it's a daily practice, a constant return to center. 3 traders showed us the path through their stories. Adam Moradi found it through losing everything. In a Turkish park with nothing left, he discovered what it feels like to trade without fear. He learned to observe the observer, to watch his emotions from outside rather than being consumed by them. Daniel Holmes found it through mechanical precision. 2 L's and done. 15-minute closes only. Wait for the retest. Rules that remove self from the equation. Systems that execute whether he's feeling confident or scared. Takashi Kotegawa found it through radical detachment, hours of stillness, unchanged lifestyle despite millions in gains. The journal question that mattered wasn't whether he was right, but what he felt before he clicked. 3 paths, 1 destination. Let me consolidate everything into the 5 pillars you can use starting today. First pillar, observe. Before every trade, pause for 5 seconds. Name the emotion you're feeling. Ask whether you're trading from emotion or clarity. If emotion, close the platform. If clarity, proceed. Adam in that park, he learned to watch himself from outside. You can learn that same skill without losing everything first. Second pillar, simplify. Trend lines, support and resistance, candle closes, that's enough. Complexity is camouflage for lack of discipline. Simplicity creates accountability. Daniel makes 6 figures monthly with breakout, retest, enter. Nothing more. Third pillar, wait, the sniper's patience. 90% of trading is not trading. Show up to see if the setup comes to you, not to trade. Kotegawa sat for hours doing nothing. The nothing was the edge. Fourth pillar, protect. Position sizing, circuit breaker, survival math, 2 L's and done. Size down when uncertain. Your account is your ammunition. A 50% loss needs a 100% gain to recover. Fifth pillar, detach. The ghost in the machine. No ego, no validation, no celebration that ties your worth to outcomes. Kotegawa still ate noodles with $160 million. Adam never sold his revenge building, the identity of trader without the identity crisis of being wrong. Here's your test. Can you watch the market for 3 days without trading? Can you feel the urge to click and kill that urge? Can you see a 500% pump happen without you and feel nothing but mild interest? That's 0 point, that calm disengagement, that complete independence from the market's emotional hooks. Adam's closing wisdom deserves one final repetition. What's the secret? There is no secret. The simpler you look at the chart, the simpler it becomes. So don't complicate it. The paradox that governs everything. The more you chase money, the harder it runs. The more you chase control, the more money comes to you naturally. Stop fighting the market. Start mastering yourself through it. The market will open tomorrow. Your fear will be there. Your greed will whisper. Your FOMO will scream. The urge to revenge trade after a loss will feel overwhelming. The temptation to size up after a win will seem logical. But now you have something you didn't have before. Awareness. And awareness is the beginning of everything. You know the enemy has names. Fear, greed, FOMO, revenge. You know they're hardwired into your neurology. You know they'll never disappear, but you also know they can be observed without being obeyed, named without being followed, felt without being acted upon. You know that Adam Moradi lost everything and found freedom, that his wife's 5 words, okay, just go to sleep, were worth more than any trading system. You know that Daniel Holmes waits hours for setups that might never come, then walks away empty-handed and calls it a successful session. You know that Takashi Kotegawa sat still while the world panicked, then struck with precision that seemed supernatural but was simply patience. You know that simplicity beats complexity, that boredom is the filter, that the profitable trader is the one who can do nothing. The question isn't whether you understand these truths. You do now. The question is whether you'll practice them. So here's your assignment for the next 7 days. Before every single trade, write down one sentence answering this question. What am I feeling right now? Don't judge it. Don't try to fix it. Just name it. Fear, greed, boredom, frustration, confidence, whatever it is. At the end of the week, look at your trading journal. You'll see a pattern emerge. You'll see which emotions preceded your worst trades. You'll see which state of mind led to your best decisions. That awareness alone will change your trading more than any indicator ever could. If you want to master these emotions alongside others who are walking the same path, subscribe to this channel. We're not building an audience. We're building a tribe of the 1% who understand that psychology is the edge. The market will always be there. It will open tomorrow. It will open next year. The question is, will you still be trading? 0 point is available to you right now, in this moment. The practice begins with your next session. You have the protocol now. Use it.